Good morning and welcome to BuiltPlace's Housing Conversations. This is episode 19 and hopefully you can actually hear me this time because my microphone is working. And today we're going to be talking about the house building industry and particularly in light of MHCLG's latest housing supply numbers. So I'm going to be talking to Greene shortly, but first of all we'll have a quick look at some of the stats on the sector. So first of all, looking at the data that's out of MHCLG today, we can see that actually there's not much change in house building activity. The net supply numbers were about 0.8% higher than they were last year. So this is looking at the 2019-20 financial year. And within that, we saw a bit of an increase in the house building numbers. They're up slightly, but then also a decrease in changes of use, permitted development rights, and other contributions to overall housing supply. So broadly, no real change, and no real surprise because we get fairly decent leading indicators for what's happening to housing supply. And the chart here is showing you a couple of them. We've got the number of energy performance certificates on new build, which seems to be a pretty good indicator for the overall net increase in supply in gross level, so house building completions, changes of use. And we've also got the net change in the council tax base, and they both give us a pretty good leading indicator for net additions, but also more interestingly they give us a bit of an idea of what's actually happened this year since the pandemic, because the data that was out today from MHCLG is very backward looking. It's only telling us what happened in the year up to March 2020. And as we can see, something quite substantial has happened, but we can get a bit more detail on that by looking at the numbers that MHCLG produce on the weekly number of new build EPCs. And as we can see here, comparing 2020, the red line, to 2019, the blue line, we've got the pandemic there, the lockdown, a big fall. But more recently, actually, the number of lodgements has been tracking last year's numbers, pretty much exactly. And so over the full calendar year, it looks about 40,000 fewer net new homes over the period. Albeit we don't quite know what's going to happen in Q1 next year, which could have an impact on next year's MHCLG numbers, particularly given we've got the stamp duty holiday ending and also the changes to Help to Buy equity loan, which could actually lead to a bit of a rush in activity to beat the March deadlines there. And so, it's clearly been a period of great uncertainty, and so now's a great time to bring in Greene for the second time. And Brian, good morning. Thanks for joining me.
Yeah, just one small thing. I didn't see the graphs on the...
You wouldn't have seen them. I kept it simple that time, so don't worry. Everyone else will have seen them. And so, Brian, clearly we've got some backward-looking data when everything, kind of the housing market, house building sector was kind of continuing to go along as normal, no real change. We've had the pandemic hit, unforeseen, massive economic shock. How are house builders reacting to that?
Well, I imagine with extreme concern and with caution and probably considerable uncertainty in terms of exactly how to behave. I mean, if we look back to, say, the nearest thing that we can compare this to, I suppose, and a bit too near really, is the response, the effects of the global financial crisis and the recession that followed. We saw a massive collapse in house building, and a lot of house builders under a lot of stress. In a sense, that was very much a kind of financial, economic challenge. This time round, there's both of those. And there's also a mass of other problems that they face as well, or challenges that they face. Being a man of not huge memory, I started making a quick list, and it took me to 10, and then I thought I'd give up at that point. So, I mean, obviously there's the economic challenge that they face, but also there's that somehow seems to have dwarfed what was a challenge that they kept bringing up in most of their annual reports earlier than that, which was the challenge of Brexit. Now that poses a number of things. Firstly, it has the potential economic impact of depressing economic activity in the UK, and therefore one might imagine making it tougher for anybody to trade in that sense. But for house builders, there are other issues around that as well, certainly in terms that they've got to consider in terms of a large amount, certainly in the southeast, London and the southeast, the labour is imported effectively. And also you've got import of goods and materials, and you start putting tariffs on those, you can start seeing the cost base rise for house builders and their resource base squeezed. So there's that that they've got to deal with. Then there's the eco agenda and the future homes that are coming up. People are just beginning to hear how we're going to stop new homes having gas boilers, and that's just a small part of the whole package of challenges they've got. That they're dealing with quality. People will remember the issues around, say, Bovis or and Persimmon, etc., over issues of quality. And the industry as a whole has decided that isn't acceptable, and has helped to push forward the new homes quality board concept and the idea of a new homes ombudsman. So there's going to be money going into that. Then we've got the changes of Help to Buy coming, which will put the caps on regions, and then will it end, won't it end question about everything. I mean, who knows? I mean, it's the extension, and so they've been preparing for all of that. The government decided on a stamp duty holiday at the start of the pandemic, which is possibly not the best time, because that just created, as we were coming through at the end of the first lockdown, which effectively just saw house prices go north, or helped it to happen. The problem with that is that creates an end point, which then presents a challenge to the normal trading conditions that people are up to at that point. Then there's the fallout from in the wake of Grenfell and the sort of building quality stuff, and some pretty ugly stuff coming out of that, actually. I mean, very disturbing stuff. And some of the house builders will have put provisions in there to deal with the consequences of that. And then we look at the pandemic and what that's done. So it's brought the whole notion of working from home. Everybody's a bit obsessed about the whole idea about what it will happen. We really don't know where that's going. But what's certain, that was happening anyway, but COVID really has accelerated that. So what we don't know is how more, I suspect there will be much more flexible working around where you work, and an increase in actual home working, but that has profound implications for where we build and what we build. So house builders have got to take that into consideration. I told you it was a long list. And then you can add into that the fact that we've got an aging population. And actually what we're beginning to see is we're seeing some of the baby boomers coming over the line into pensionhood, a lot of them with a lot of the housing wealth as well, it might be added. So they're but we've got a whole bulk still to come across that line. And if you look at the proportion of pensioners to working people, that's going to start rocketing in the next 10 to 15 years quite substantially. That has not only implications for the economy overall, but it also has implications for what homes we build and where, given that we have a massive housing stock, as it is getting close to 30 million homes, and they're built for a society that broadly will not be the same as the society we have in 10, 15 years time, or the society we already have. And as I go down this list, and then obviously you can add into that yet another decision to change how we do planning. So, and this is leaving aside things like, the impact of technology or MMC, off-site manufacturing in house building. So if you look at the agenda that house builders are facing, it is enormous. There's a huge number of variables there. So it would be a very brave person who suggests that they know how house builders will react. But one thing I would certainly suggest is that they will act with a degree of caution because of these variables, because there are so many, as you can see from that, potential landmines between where they want to be and where they between where they want to get to and where they are. So I think that provides you with hopefully a little bit of a background of the challenges that house builders face.
Yeah, I suppose it's maybe a slightly broad brush, but you could probably characterise house builders as being much more cautious heading into this economic downturn than they were perhaps in the last one. If you compare where they were back in 2007, 2008, heading into the crash back then, and so they experienced that period. There's still, you've got an awful lot of the senior managers who were around at that point who are now still in the business. And so, how has that kind of affected? Have we seen anything, that reflects that in their current approach since the pandemic's hit?
Yeah, well, I think the period leading up to the recession, the housing recession, was quite an interesting one, because there were a lot of sort of wobbles around the sort of 2004, 2005. And then there was a drop in interest rates, and then suddenly the housing market kicked off again, because it looked at around 2004, 2005 as if we might be falling into a depression in house prices. I mean, and don't forget, at that period, most people would have been thinking back to the 90s and thinking, are we going to get a house price crash, and what does it mean? And they would have been looking at that as their kind of their yardstick of what might happen. So leading up to it, there was a degree of caution, but I think that when they got through that period and came out again, there must have been a sort of a dodged a bullet, or however they read it. But when they went into it, there was a degree of caution, but not anywhere near what they have now. I think coming out of that, they will have learned huge amounts from that experience, and they will clearly be better prepared this time round. I mean, one of the things well, certainly going into it, they had high margins then, but they've got higher margins now. So they've got a little bit more wiggle room in terms of if there's a suppression in prices of what they're going to sell. But I think the challenges will be more complex than that. Another factor, I think, is when we're looking at that in terms of how they're set, they by and large, land is a smaller proportion of their cost base than it was going in before. So I had a quick look at some of the figures, and I think they were ranging around the kind of 25% mark of average selling price was the land cost. Now it's nearer the sort of 20 or below 20. So there's a substantial difference, because if we think back to that period, there was an awful lot of write-downs of land values within the balance sheets of house builders then. And this time, I think as well, last time round, they kind of had the wrong land, because an awful lot of them have been building flats, and their whole pipeline was around building flats. And anybody that looks back at the data realizes that shifted quite markedly from flats to housing. And there's a large process of replanning. Now, I haven't looked at the array of types of planning that people have got out there in any detail, so I couldn't really comment, but I would suspect that it's probably better balanced in terms of their existing land bank and the planning permissions that they have than it was back then. That would be my gut reaction. But I think, and the point that you made, I think that the one of the strongest assets they've got are people that have actually been through a crisis like this, and they are, that learning curve that they will have had, and the way in which they can steady situations and not overreact or whatever, I think is going to be extremely useful. And another thing I think that is interesting when we look at what's different this time round to last time round is their ability to use data and to analyze data to track their path is significantly more sophisticated than it was. I mean, if you go 20 years ago, the idea of computers was kind of distant from most house builders. Now they're highly reliant, and they're getting more sophisticated, and a new generation of certainly brighter people than I am going through that sort of that sort of tracking. But there's another interesting thing that I think is probably worth considering and exploring, is the way in which they've kind of de-risked the model. Back then, there was a lot of, obviously there was Section 106 houses that they were building and stuff like that, and some of them used that to cushion, by bringing some of that forward, cushion the blow and continue building through to ease their path and bring in money. But this time around, but broadly speaking, there was quite a low level of non-private sector housing. This time there's a significantly higher amount of non-private housing. I put the figure somewhere. I think it's gone from about below 20% to around 25%. So in a sense, they're de-risked, and they're much more open to different business models, different arrangements, and also across tenures. So, they've been playing with joint ventures. Some of them actually moved into build to rent. If you look at Telford, for instance. And interestingly, there's been a big increase in partnership housing, where they're building with housing associations, etc., to deliver housing, which is a kind of a sort of quasi-contractor kind of model, but it provides stability and toying with shared ownership as well. I mean, so they appear to be much more open to different models, and I think that will give them more resilience. That's personally, I might be proved wrong here. But take another look back, and you see that actually the people delivering housing now are different from then. There's an awful lot more of the housing associations. They've really ramped up the amount that they've built. Now that's an area that I can't claim too much understanding on, and I don't know how resilient they will be and how exposed they might be. But they do have big balance sheets, which is helpful. And the other thing is you've got people like L&G coming into the marketplace, which is quite intriguing as well, because they have a massive long-term perspective on this. So in terms of the available builders out there to deliver homes, it strikes me as if there's a much more resilient base to build from, if you like.
Yeah, so I suppose, and that increasing diversity is interesting. First of all, because we don't particularly have any great statistics on it. It's not reflected in the MHCLG statistics, so it's more kind of anecdotal and other data sources that we use to pull that together to build that story. But it's interesting that we've got a greater diversity of people involved in the house building, particularly the kind of the non-social or non-affordable house building part of the market. And at a period where the house builders are taking less risk, arguably some of the new entrants, housing associations in particular, have been taking far greater risk to increase the delivery of homes over the period. So we've got an interesting situation where last time around, kind of the housing associations and government via the predecessor of Homes England and through housing associations came in and bailed out the private sector and helped maintain a certain amount of delivery during the last recession. This time around, actually, the private house building sector is much better positioned to deal with the economic problems, whereas some housing associations may find themselves actually in very tricky circumstances, given particularly the geographical concentration. We've seen a lot of the increase in activity has been by London housing associations, and clearly the market there is undergoing probably we're seeing the most extreme kind of signs of stress that we're seeing of anywhere across the whole market at the moment.
Well, I think London is an interesting case. I mean, the exposure as well to what one might call the sort of core house building fraternity, if you like, to London is probably a bit lower in some respects, because an awful lot of the work will be done by what people might class as developers. Now, these are all very vague terms as to what's a developer and what's a house builder. There's a lot of crossover between them, but I suspect a lot of the house builders are less exposed to London. I should have looked at the stats beforehand just to make that point, but that's my suspicion really on that.
Yeah, and it'll be interesting to see what happens in terms of the geographical spread of where housing market activity is happening. And the Zoopla index yesterday seemed to suggest a recovery in London and the southeast in terms of house price growth, but then the continued regional variation that we'd seen with much greater house price rises in the north of England and the Midlands. And it seems that the house builders that have done best in recent years have been those that followed that trend, whereas those that had stuck with either a heavily London or a heavily south of England bias in where they were active have perhaps struggled a bit more in recent years?
Yeah, I think it's just so hard to tell at the moment because I think there are so many shudders going through the market and the data is bouncing around quite extraordinarily that it's hard to know what the to take out the noise of short-term trends, short-term spikes and stuff, and actually see what's really going to happen in the longer term. I mean, I think that you're beginning to get into areas where you're thinking, well, and a lot of people are asking the question, what is the future of London? If rents start dropping and prices start dropping and more people work from home and live outside of London and commute in once a week maybe or whatever, so they can, we're already seeing and have been seeing travel to work areas expand and expand and expand, when they become almost irrelevant, where more people are working from home. And one of the interesting things is that oddly, the people that live in London at the moment are technically the most likely to be able to work from home. So they will be able to have a choice of saying, well, do I want to live in London or do I want more space? And one of the things that certainly came out of Richard Donald's kind of commentary on housing and the post-pandemic bit is this kind of race for space thing, where you're getting a lot of people looking for more space. And these are big questions that nobody really knows. We can keep pointing out evidence that suggests things, but it'll only be in a few years' time before we really get a clear picture of exactly what trends there'll be, because there's always this danger that what you see is a number of people that probably would have done that anyway, doing it early and giving a big spike, whereas actually that isn't necessarily representative of the population as a whole. So you're seeing spikes in certain areas just because there's been a panic in a sense, or shock, and that isn't necessarily reflective of the trend. But I mean, the assumption is, I think, for most people, that we will start to see people moving out of London. So that presents a particular problem, not just for housing, obviously, across the whole land market in terms of commercial, etc. So that will be interesting to see how that pans out. I mean, I wouldn't want to sort of make too many predictions on that because I'll probably be wrong.
Yeah, and I suppose bringing it back to your big long list of risks that house builders are facing, I always joke that if house builders have got nothing else to complain about, they complain about the planning system. But the thing that they dislike the most is uncertainty, and we've got bucket loads of uncertainty at the moment. And you kind of alluded to it at the beginning, but where does that sit? What can we expect from house builders given the continued focus of government on building 300,000 homes a year, increasing housing supply and everything else? Are house builders going to buy into that message at the moment?
I don't know. I think they'll certainly follow the market where the market exists. But my suspicions are, I mean, if you look at the sort of OBR figures, I mean, that's going to have a drag down on people's desire to move at some point or desire to buy a house at some point, I would have thought. I mean, let's not forget though, in fairness, that for an awful lot of that drop in economic activity was a drop in consumer spending, and that consumer spending that hasn't been spent is sat in various people's bank accounts. I mean, you just have to look at the savings ratio, suggesting, I don't know, £100 billion of extra cash sat in, it must be said, the wealthy people's bank accounts. So that, how that plays out, whether that just going to consumer spending or whether that group of people will use that to upgrade their home or whatever and create activity in the market, I really don't know. But if you look at it as a whole, you do get a feeling that at some time there's a price to pay in terms of the numbers of transactions, although they're staying low. Maybe it's just that they will continue to stay low rather than bouncing back as other people would have it. The other thing, and you know this much better than I do, which is the shifts actually in the types of people that are buying, and the demographic shifts that are going to start playing on that. And I think they're going to start altering things quite markedly in the near future. I mean, when you start looking at the trends and seeing it, I mean, I come back to this point that what we should be looking at to some extent, rather than just the number of units produced, what we need to look at perhaps is what kind of housing do we need in 15, 20 years' time? And what housing stock do we have now? And how do we better match that? Because I think that's the best way that we can be efficient certainly about how we use housing, and also give more people a better place to live. And I think you've got to make the judgments on whether it's just a case of, can I get some kick out of saying I built more houses than anybody else built, government, or do I house people better? And I think now's the time for reflection on that. And I would have thought that that's the way that they should be looking, and they should be looking at some of the demographic statistics that are going on, some of the likely changes, and actually work out where we really will need houses. Because the one thing that is clear to me is we are going through a major shift, both socially and economically, and in terms of where people live. And that's, we talk about there's been a drift to the south for decades and decades and decades, and that was accelerated when we went through a similar kind of period when we switched from a manufacturing base to a services base, and it just sucked loads of people. London's population, for instance, was declining until the 80s, and it's grown by 2 million since then, and that's created a massive wave. If it shrinks again, as it did after the war, what does that mean, and where do we need to put houses? I think these are the bigger questions that we should be facing, and I think to some extent, I think chasing numbers is actually rather missing the point, from a personal point of view. Anyway, it's not as if I don't want to see more houses built, because I think we do need to have more houses, but I think it would be better to have houses that people are more suited to live in. That's my view.
Thanks, Brian. I think that's probably an opportune time to finish there. So thanks very much for joining me today, and thanks for bearing with us while we dealt with the technical issues with the microphone in the earlier version. And
well, I'm glad it was you having to deal with it, not me, because it would have just ended.
We got there in the end, hopefully. Thank you.
Thanks, then. Take care then. Just bye.